Hi all and welcome back. My name is Matteo Mazzoni and I'm here with our Energy Foresight podcast. And today is a special episode. It's an episode about E-World. We went to the main energy event in Europe on the 23rd and 24th of May, and we had a lot of interesting conversations with industry colleagues and old friends. And here with me, I have Tom Marzec-Manser and Andreas Schroeder. Welcome, guys. I think the best place to start is definitely falling gas prices. The ICIS TTF is now below 30 euro per megawatt hour. It's been trading at, let's say, these levels for quite some days now. Tom, can you tell us a bit more what our customers ask us?
Yeah, I think they're really wondering where the bottom is on the ICIS TTF. How low can it go? As you said, it's but has been well below 30 euros, well below even sort of 24 euros per megawatt hour. And I think there's an interest in terms of will Asian LNG demand return? There's a concern over the rise of Chinese spot LNG buying in particular. And so that's been a key topic of conversation, as well as the continued decline in LNG demand into places such as Japan and South Korea. So that's one area. We've got the continued availability of volumes coming out of the US Gulf, which is keeping the Atlantic basin well supplied. And of course, there's the underlying question in terms of what's happening within Europe itself in terms of demand, and is demand on the industrial side, on the power side, really returning? So those were the big talking points from on a gas price weakness perspective.
You touched upon one very interesting point, and it was possibly one of the common topics among different conversations that we had, which is the demand destruction, and possibly whether there's going to be a rebound in gas demand this year or over the next months. Andreas, we saw that last year temperatures played a role in that, but was it just about temperatures, or do you think that other factors played a role?
So clearly we can say milder temperatures helped us over this winter, and we're still enjoying mild weather at this stage of the year, and storages are at record high levels. We have roughly 70% filling levels. This is relatively high by historic comparison. And also, we are seeing still a dump in industrial demand, as we have seen last year as well. So 20% lower than average industrial gas demand. And this sparks a lot of question on whether this is really due to fuel switch, or is this due to more, let's say, demand destruction. So this would be more permanent closures of sites that we would not see coming back immediately. And overall, we can say industry is quite sluggish in their demand response. Yeah? They are not responding as immediate as the power sector to price changes. Also, industry is seeing the higher prices on the forward curves for the coming winter, so they're not aggressively bringing back production now in the summertime because already seeing higher prices.
It's another very interesting point, the ability of some sectors other than power to actually switch from one fuel to another and exploit or take advantage of the different price differentials among fuels. What is the outlook for the gas side? Because we know that power, they're struggling a bit with the permitting. Is it the same for the gas side, Andreas? And please, Tom.
So we do see renewable growth is accelerating, but still there are lots of uncertainties when it's about the ability to fast track the permitting. Getting the right price structures in place, and also speeding up against the sourcing of all the materials which are needed. And additionally, there's an element connected to the grid. So the pace at which the grid needs to develop is not really in line with renewables deployment. And so this is already creating some troubles in a few countries, for example, United Kingdom, Spain, and Italy. So overall in Europe, we could say we're scaling up with the deployment of renewables, but not at the levels really needed.
Yeah, and on the LNG side, on the FSRU side, we also have an investment question and a sort of a dichotomy in the sense that yes, you can get an FSRU up and running nice and quick, but is there really that demand for it down the line? Yeah, we've got a short-term supply bottleneck which is being filled by FSRUs, but there's a concern there'll be an underutilization, I would say, with this capacity in the years to come, given the reduced consumption of gas. So the FSRU is solving a problem, but it's also actually realistically showing us that major investment in full onshore FSRUs are not needed. And actually there's a geographical split as well, right? So we're seeing a lot of new FSRUs in the Netherlands, in Germany. We've had a brand new one is coming on stream in Italy, and Le Havre in France is the vessel is on its way from Singapore as we speak. But actually Eastern Europe also has some gaps there, and there is, as I say, there's a geographical split between East and West of Europe.
I guess if I understand what you guys are saying, is that it looks like everybody is trying to build as much capacity as possible, both on power and gas side. I think there was a topic of conversations around rings, more or less. That was quite common as well, and a few customers asked us about the next crisis, and I think this makes it also as a great closing question. What is the next crisis coming, guys? What do you think?
Where the next crisis is, I think on the gas side, it's that real extreme difference between summer prices and winter prices, the volatility in the shape of the forward curve, and what that means for structural demand within Europe, and therefore the ramifications that has on the wider economy. If we're in a situation right now that gas prices right now are super cheap, or not super cheap, but gas prices right now are comparatively cheap to where they've been, but the prospect of very expensive prices in the winter are disincentivizing industrial end use of gas, and therefore that has an wider economic impact. And if that happens on a multi-seasonal cadence for the next 2-3 years, then that will have real impact. But yeah, over to you, Andreas. What do you think?
Yeah, so in my view, it's maybe not the most immediate next crisis, but it's a long-term crisis that we will definitely face, the climate crisis. And I'm alluding to the lock-in effects I see on the LNG market. So we have a huge amount of LNG terminals that are seeing for final investment decisions now. Also on the regas demand side, a lot of customers are locking into new long-term contracts. So this will stabilize the gas sector for years to come. It will also trigger new investment, and all of those are lock-in effects which are detrimental to the climate goals for some countries. So this is a crisis we're going to face. Maybe some of those assets which are being built now become stranded assets, even in case they are not hydrogen ready. So hydrogen could be the last resort for the gas sector.
Thanks both. It's been quite enjoyable conversation. I hope it was the same for you. As always, if you want to know more about Energy Foresight, please visit our website or simply scan the QR code that you see on the screen. Till next time.
Cheers. Bye now.
Thanks.